All right, hey, back for an action-packed episode. We have a lot to squeeze in. I feel like it's been, has it only been a week since we recorded, or 2 weeks?
I don't know. We're off schedule a little bit with all the travel.
Yeah, it's been at least a week, and it's interesting that it's kind of one of those times a year where there's a lot happening in just a short period of time. So I hope, as we meander through the episode and I get on my soapbox and talk about different things, that we have time to hit everywhere. So where do you want to dive in at?
Well, let's just start. We've been traveling a lot. I think over the past 6 weeks, I've been gone 5 or 6 times. I think you've been gone 5 or 6 times as well. A lot. So we're through our brutal roll. Look, we've got our fancy F1 hats.
That's right.
Why don't you lead off on that?
Yeah, mine's Miami style. Like, I think this hat is it's
very loud. I would rock that for sure.
It's very Miami. So I told my wife, I was like, I'm gonna call this my Miami Vice hat.
Yeah, it's cool.
No, it was cool.
I just need to get the matching car for the hat.
It's true. It's true. I went to F1 with my wife. We got invited out. We were, hosted out there by, Centene for an event out there. But it was great. It was mostly small group, leadership strategy. Had a business session out there that was really critical. I think it's important, have those people in the room talking about the industry at large, significant things impacting the industry, talking about the future and strategy. So that was a really good business, working session with their leadership. And so valuable. It was good to spend time out there, but like all events, we always say, it was cool to go to F1, experience that. It's a huge environment, 275,000 people. Miami's a different world, I always say, and it's not necessarily representative of what I think is your average Floridian or what Florida is like. Miami's its own place, and but it's always good to be there. And like I said, I value more time spent with leadership and decision makers, and being able to talk through what we're experiencing and hopefully corrections on things. That's more valuable to me than the actual event itself. So that was 4 days. That we were out there, and it was always good to also see other industry peers and friends and talk shop a little bit too. So that was good. And then
short turnaround and then right back on another flight.
Yes, yeah. We left that event, came home, and then we just got home. Mike and I and Jeff, we were out in Minnesota. We were at the Optum and United Healthcare HQ, which was the same thing. Very impressive. A lot of their people are still remote or have been remote ever since, COVID. So they haven't had a really big return to office, but as far as their facilities, it's different now. They have a perimeter, kind of a fence around the whole perimeter of everything. Security checkpoints. You gotta, it's a story for another day.
Yeah. We had fun, had a good experience.
We weren't on the list initially. We had to get cleared, but that's maybe a story for another day. But trying to get in is, it's not as easy as it used to be. But so that was great. It was impressive to kind of go through their HQ. We appreciated their leadership team and wanting us to come out, and it was great. They kind of presented and showed us HQ, gave us a whole tour.
And their innovation center was really cool. And their command center of all their data.
Their situation room.
Yeah, situation room. That was really cool.
their situation room and their real-time data and giving us the tour was really cool. It was insightful. So they kind of showed us, kind of some of their capabilities and systems and what they're doing, and, kind of discussed a little bit some of the projects and things they're working on. And then, we were able to kind of present to their leadership and kind of familiarize them a little bit more with ourselves and our organization and who we are and what we do. Because like everything out there, I mean, there's distributors or entities or people who play somewhat of a role in the healthcare ecosystem, but they weren't really deeply familiarized with us. So it was kind of nice to have a few hours with their leadership team and talk about that.
Yeah, it was awesome. Really good high-level conversations there, behind the scenes, and a couple interesting takeaways, as they're preparing. We met with the UH1 leadership team there, and they're really, like everybody else in the industry, everyone's kind of trying to play their best guessing game, right? Everyone's trying to look into their own crystal ball and figure out where things are going right now for the next, the rest of this year and the coming years. and trying to make necessary adjustments right now.
Yeah, and I'm just going to throw out there, one of the conversations that wasn't just there, but has been happening, widely is there still, really some uncertainty about ACA, and we can get into ACA a little bit later in the episode about, whether or not like those enhanced subsidies are going to renew, and whether they're going to be there or not. It's most people at the moment are saying they're guessing they're not going to renew. We talk about, it just always happens at the stroke of midnight where there's a bipartisan compromise and things get renewed. So there's a chance that it happens, but just with the uncertainty now, maybe does the election code for the 150% FPL, does that go away? When does that happen? I mean, it's under discussion right now. And so there's a lot of questions. And so I keep saying, like, and again, not just part of the dialogue there, but when are we going to bring back, STM products? I think that the new administration does not have the same tone where they're taking and saying that's, junk insurance. And that's not the direction that they've been going. And so with all this uncertainty about election codes and, we're going to talk also about, now there's, they just put out a memo about the MEC, the election code.
Essential coverage.
Yeah, if you don't have a minimum election essential coverage, things are now kind of going back to pre-2020, back to think of selling health insurance back in 2018 or 2017, where if you were using a special election code, you had to provide documentation. Mm-hmm. So as of May 16th, like next week, if you're trying to use those election codes to write a plan, you're going to have to upload documentation, to actually use a valid election code. So things are going back to how they were. But so anyways, I was just going to say that all these things are questionable, like what election codes, and are you going to be able to help people get onto some form of health coverage, with now having to validate and use election codes? It seems like now would be a great time to start allowing or bringing back in those STM products, or like the 3x12s.
Well, there's going to be, the carriers are estimating, they're all very interested in what percentage of this fully subsidized business, right? Because it's either 78 or 80% of all ACA membership is subsidized, right? And a lot of it is fully subsidized, meaning many of those members on the ACA pay zero. They don't pay $1. And one of the big problems that the current administration has identified and is working on is many of those people may not have ever known they were on a plan, right? Somebody may have put them on, dragged them onto a plan, and they didn't even know they were on one of these ACA plans. So there's a couple of different components of if they lower the thresholds for the subsidies, that's what a lot of people think is going to happen. But not only that, there's probably going to be some sort of mechanism in there where they have to have some sort of financial skin in the game, almost like a verification of proof of life, right? Proof of policy. And they've talked about the $5.
Yep. There's still a lot of zombie policies out there,
Yep.
right? We've been talking about it for a while. A lot of these, to Mike's point, there were people who were enrolled in the plan, and maybe legitimately, maybe somebody 3 years ago put their information out on the internet, like on a lead generation site for, and gave consent somewhere. And they got enrolled into, like, I don't know, an Ambetter plan or a Cigna plan or whatever. And, but they don't even know. And then shortly thereafter, somebody switched them to a different plan. They may not even know 3 years later if they've been flip-flop back and forth to a different plan and if they're signed up for anything.
Yeah, right? and we've heard about all the fraudulent activities that some of these entities were doing. You heard about that one in Florida that just recently got popped where they had the street teams enrolling homeless people, essentially trading them enrollments for sandwiches and $5 bills and stuff like that, all sorts of crazy stuff.
Doesn't that sound great and legitimate?
Yeah.
Right?
So you've got all that happening. And my point was many of these carriers are bracing to have 5 to 10 million of those lives on the ACA essentially be not qualified or kicked off of those subsidies. And so
the number from a respected person was that they anticipate 8 million to be the number.
Yep. And I've heard, that's why I said 5 to 10 is, depending on who you're talking to in the industry, the carriers. So, that's essentially 5 to 10 million of these policies that could potentially be evaporating off the rolls of these ACA carriers.
Well, let's talk about that, though. Again, I don't have a problem with that. Like, I personally don't. This is what needs to happen in that, but it's going to change the industry, right? Because things have been broken for a while, in the sense that if you're a good agent out there and you're meeting with people across the kitchen table or speaking to them on the phone, and you're actually being an insurance agent, and you're actually talking to people about where they're accessing care and how to use a doctor, and here's what this plan covers, and you've got a book of business, and you've got 300, members or clients that you're helping with that. Somehow did you maybe acquire 7 or 8 or 9 people that are kind of like slip between the cracks, or, you haven't heard from after you enrolled them 3 years ago and you're going to lose? Maybe. But the normal Joe Schmo agent is not impacted by this. What's really impacted were these big box spin up kind of like fraudulent organizations who are selling boatloads of volume. And then there's actually, quite frankly, some distribution and distribution agencies out there that have these entities underneath them who sold business or wrote policies this way. They are going to be losing anywhere from 15 to 60 or 70 or 80% of the revenue that they had created in these entities. Yeah. So when you actually are requiring a real human who really wants insurance to have to actively enroll into a health insurance plan, know what they have, say, here's my credit card or my banking information, and yes, sign me up for this plan, it's going to wipe away a lot of those, basically crappy businesses that were built on, fraud and, crap. So I think that's going to be actually a great thing. But again, there's been entities, and a big portion of their revenue has been that,
Well, and then there's been carriers that have been the benefactors of a lot of that, right? Where, for all intents and purposes, they probably have a lot of lives that were enrolled on these. They were getting subsidized dollars from the government. And if that person never even knew they had a plan, or were, how do you
their claims data is pretty great.
Yeah, it's pretty low claims data when that consumer doesn't even know they're on your insurance plan, And then there's been simultaneously recent statistics that show that as premiums have gone up on some of these plans that aren't subsidized, that utilization goes up, right? Because there's almost this thought of, hey, if I'm paying this for my insurance plan, if I'm paying X amount of premium dollars, I'm going to go get my money's worth out of this, essentially, And so that was one of the things that United pointed to with their poor quarter was, as claims or premiums have gone up, so have utilization. And so there's this swirling storm out there, I guess, is kind of what Dan and I are alluding to, that we're seeing and experiencing real time. And I also think it's a lot of what played into part of Aetna deciding to exit the space altogether next year, which we'll get into. But you basically have this whole cottage industry that spun up over the past 5 years of easy come, easy go ACA policies, and all these entities and sales orgs that were actually not, let's be honest, they weren't insurance agencies.
Well, let's be honest. Some of these people were entities that used to do PPP loans, and then they went from doing PPP loans to then doing
slinging mortgage protection insurance or final.
And then we're going to do ERC credits, and then we're going to go move from ERC credits over into this, other space.
We're selling solar leads. We're lead gen people. Yep.
Yeah. So they just go from all these other industries. I don't want to they're not all grifters, but it kind of that is a little bit in their background. A lot of these entities, right?
A lot of them are from that area and wearing hats like that.
Yeah, we'll get into that later. I think Mike and I want to have a bigger philosophical conversation about like the tone and what we're seeing in the industry, maybe near the end of the episode. Yeah. But kind of getting back to it. So big changes happening in the ACA, and you brought up, so first and foremost, just to kind of summarize my rambling thoughts, number one, it's going back to like business used to be done back years ago. As of May 16th, you're going to have to use documentation if you're using like a loss of coverage, that MEC special election code, right? So you're going to have to use documentation and upload. I think it's good. Are brokers going to sell less? Yes. Are you going to have to go through some hoops and work with your client to get some documentation? Yes. But you're going to have legitimate policies that are going to be stickier and they're real. So I think it's a good thing. Number two, we talked about it last episode, but was it Iowa that said, hey, no more principal NPN overrides? Yep. I think the trend continues, and week over week over week, I think I'm predicting at least 3 to 5 more states this year say, hey, no principal NPN overrides are selling. And if you're a regulator listening to this and you're somehow involved with the DOI, I fully support it. We've always said that agents should have that fiduciary responsibility of selling product tied to their own NPN. And also that's how they've done these shell games like burner phones with all these NPNs over these years. So carriers, how it's impacting you is you need to really understand at this point in time, you can't have these lame excuses as to why you can't have sophisticated systems or data enrich or do anything else. You need to be able to have investment into technology and systems that can track NPNs and multiple NPNs and have hierarchies and levels and be a little bit more sophisticated. It's overdue. So I would say that is changing. And then the biggest news is, of course, Aetna just decided nationwide to exit the marketplace. And that one is hard for me. I mean, I would say that that's a relationship that we valued, that we like our Aetna partnership on the ACA and the IFP side. We think that Aetna, and the biggest part about it, it wasn't anything to do with commissions or compensation. Yes, they paid great, but that's not why I have heartburn about it. We personally know of the members that had a great experience with Aetna Insurance. We thought that it was really great coverage option that was there. We had great feedback from those members. And from a practicality perspective, they had their stuff together technologically. Their portal was great. More often than not, their commission payments and statements would match the book of business. Can't say that about a lot of the other carriers. And so just from a tech perspective, onboarding, doing business with them was very, very easy. So not having them as a national carrier in multiple states it's going to suck.
They were one of the ones that we definitely loved working with, and we have a lot of policies with them that need to move. And, more than anything, I think that, Aetna had a really rough year last year on the Medicare side of things and started a bunch of business. Estimates were up to 800,000 policies. Yep. And then here we are, a year later, and they're announcing the complete withdrawal of the ACA space, 1.1 million lives.
Well, and here's the other challenge, too, for now the other carriers remaining in the space, especially for the biggers. So for Elevance, for Ambetter, for Cigna, for United, for all the other carriers that are still in the space, it's sending shockwaves a little bit just because now somebody's going to have to absorb that membership, right? And so you look at their reserves, their filings, how much of this membership can they actually handle? So now that's a whole new element that they have to kind of take into account when they're building their products this year. So that can be a real challenge.
Well, and just carriers. For the agents the poor agents out there just can't get a break, right? You have another big, large carrier that seemed very legitimate, very reputable, very safe to place business with. And now you've got to go spend your OE rolling a bunch of business again, and the consumers are going, what the heck? I was on that, and now it's gone. That doesn't bode very well.
And here's the message again that I always continue to, it resonates, that I continue to bang that drum, is that it's not a dirty broker going out there to flip business and cause friction and move it because they want a commission or something. They would have rather put the consumer on a stable product, leave them there, renew that same product, call them back and check on their consumer and educate them and just keep them with that consistent product. It's not the broker causing this friction. They don't want to do that. So that's the unfortunate thing. And the last thing I want to touch on with it is this is a thing that I guess lawmakers don't understand because the majority of them, have not ran businesses and they don't really even understand business, many of them. But it's not, they think, they always try to put rules and regulations in place saying, Fairsies, well, you need to be able to sell all these different companies and plans and, we don't want steering to this company or that company. There's always going to be steering in one form or fashion or another. Even if an insurance company pays an agent the exact same commission, so if there was a local crappy little insurance company, a regional insurance company, and a big national one, and the benefits were almost the exact same, the commissions were almost the exact same, that broker, that organization like us to sell, they're still going to do business with the organization that's the easiest to do business with. And that is the one thing that is lost, I think, in all these regulations and compliance and policies over the last couple of years is I deal with tons of these insurance companies. I think we have like 90-something that we deal with. And I'm just going to tell you, operationally, some of them suck. They're bad. They have antiquated systems from 30 years ago, They have terrible P&Ps. They are not up to times. Their legal departments are really challenging to work with. Their technology systems are not good. Their commission payments are never accurate, And so when people are saying, oh, this entity or this agent is steering there, well, you can use that term if you want, but people place business with where they are going to have a good experience that's easy, where they know they're going to get paid, where they know things are timely and accurate and good, and that's always going to exist.
Well, anything that's any sort of competitive advantage
Right.
or thing that a business does well is going to lead to steering in one way or the other, because they're going to have an advantage, whether it's intrinsic or based on paper,
Right.
benefits or price or something like that. There's going to be a reason why people choose those plans disproportionately to another.
Well, and that's I guess the reason I was bringing that point up is with the Aetna exit. That was a very good reason why people would ask, well, why would you guys be selling the Aetna versus this other product in the marketplace? And it's like, well, I can, for one, look in a portal and see active members, and it's accurate, and commissions come accurate and timely. And I can't even say the same about some of these other, carriers or payers out there, So anyways, that's just another thing while we're kind of, going through.
Yeah, and Aetna, obviously, their read on the situation with the subsidies, the premium subsidies are being expired. They're obviously expecting that to happen, right? We talked on a couple episodes ago where, some estimates, red states would actually be the most percentage of members impacted. And so, Dan and I, contrary to a lot of other people, at least I still think that there will be some sort of continuation or trade-off of subsidies, maybe to codify some of the rest of the administration's agenda. There will be some deal making. I don't think the subsidies will be, quite as aggressive as they have been the past 4 years, but I expect them to be extended.
Even this last week, lawmakers, and right now, Congress, so the House and the Senate are both controlled by Republicans, but they just removed some Medicaid cuts that were on the table.
Yeah.
So again, I think it's always, we try to stay out of politics as much as we can, on the podcast, but at the same time, it's very much an element. It's in the nature of the business. Mm-hmm. And I will say that, in many ways, there's a lot of grandstanding that happens, and, it's a lot of, hey, we're going to shout from the rooftops this, but then at the end of the day, when it gets time to, actually pull the ripcord, it doesn't happen, So I just think there's a lot of,
well, there's a phrase for that. It's called the art of the deal. And if anybody wants to see or know how things work, maybe they should read that book, because that's the blueprint, right? Have an extreme position, be willing to walk away if you don't get favorable terms, and then meet somewhere in the middle, right? That's the methodology that's guiding a lot of this stuff. So
accurate. And so I just think that a lot of the rhetoric, that's out there is not actually going to be fulfilled like people think. So anyways, I think enough on the ACA, but it's changing rapidly.
Where do you think, who do you think's going to win a lot of that business nationwide? We haven't really done a deep analysis on where it's going to roll, but
I think we need to, I will say this, I think that Ambetter and Centene, they've had the most fully subsidized membership and have benefited from that. I think all these carriers right now are really examining how much, where they're going to put their bids in order to basically be competitive in those markets and essentially be the entity that's winning that business.
Yeah, I've seen some analysts expect Centene. I've seen some images of Centene with the, dinner plate and fork and knife ready to gobble up all that Aetna membership.
Business, yeah.
But there's a question of, do they want it, right? Do they want to put benefits out, or in a marketplace where they're going to get maybe too much of that business, too much risk or too much unprofitable business. So I do think Ambetter will be the big winner, and then the rest will kind of be carved up, depending on where those other marketplaces are.
It's going to depend state by state and how aggressive their filings are there. But yeah, I think it'll be distributed fairly evenly throughout.
One of the hard parts, just before I move on from that I think is a lot of it's going to go to some of these local, regional, state level carriers, and from a national perspective, or a national company like us, it's hard to have all those different carriers, right, to be able to support and work with all those. And I think that'll be hard for some of these agents if you have cross state line business, so to say, or FFM business.
Accurate. The other thing that I would just say overall in general, these are all things that I've, banged the drum for years about all these problems going on at the ACA. And candidly, I've been frustrated that carriers haven't really intervened, and again, going back to, well, some of them are receiving significant payments for memberships with no claim, membership and members that are fully subsidized, that have absolutely no claims data. So, carriers have not done a lot to curb some of the fraud. I think until it really, really bubbled up last year before the election, did they start to really take action at all towards some of the fraud. And I've been very frustrated by a lot of it, even being, perpetuated by HHS, and so being in the space and kind of, being affected by it. I wasn't trying to call myself a victim, but, being affected by all this, absolutely, it's been really difficult and really challenging. So I'm, for one, just saying, even though all these things are bad or scary as far as, oh no, now there's documentation, we have to validate these election codes, and now there's going to be 8 million people falling off, at the end of the year, and oh my gosh, and Aetna's exiting the space. These are all things, though, that needed to happen. It was sick. The system was sick. It was not legitimate. A lot of it was fraudulent. This correction needed to happen. And so it was just long overdue. And the further that you kick it down the road year after year after year, the larger the problem becomes. So this has been like a long time coming.
Yeah, one final piece there is one of the concerns for a lot of the carriers and for maybe even us is one of the things on the table with the current administration is to shorten the open enrollment time down to 30 days. And what everybody's concerned about right now is if, you have a carrier like Aetna exiting and you have all the service work that needs to be done and there's extra lift on getting documentation and it's more cumbersome process there. How do you do that if you're an agent? How do you do all that service work? How do you renew all those policies in a shortened time frame already? You would think they would need more time to be able to accurately do that, especially dealing with a lot of the upheaval. So hopefully cooler heads will prevail there and there will be some sort of, recognition that there needs to be extra time to deal with some of these catastrophic upheaval.
If there's ever been a time where they would approve like an extension or extending that OE, it would be this year. As again, especially because all those people who are fully subsidized, if they want to get on a plan, and actually collect and gather their information and renew them.
And update payment information and submit documentation.
It's going to be a really, really painful, cumbersome year this year. And so you're right. And we know that HHS has less headcount than they have in previous years. So it is that is brewing for a disaster, I think, this fall. So I think that there should be some discussion about that.
Yeah. Do you want to talk about the other lawsuit before we kind of wrap up kind of the brewing storm with the ACA Medicare world?
But lastly, we'll go to the lawsuit, but the other last thing I would say is carriers also, from a leadership perspective down, need to be conscientious of their, like we had some carriers that we talked to, and look, we write a lot of business on Medicare and ACA as far as being like a national FMO or NMO. And, some of these numbers that they're saying, like, hey, if you want to be a distributor, you have to write X amount of volume. And I'm like, you mean real policies or fraud policies from 2020?
Or Fugazi 2023 policies. Yeah,
exactly. And so that is my last point that I want to make is carriers should be a little bit more realistic in reading the room right now and going, oh, those high numbers and that high watermark that we had to recognize a big national organization, those numbers were based on the Fugazi numbers of the fraud. And we probably ought to cut, especially with this environment, those numbers significantly and be more realistic with what those numbers should be.
You submitted 10,000 applications and AORs, and 1,000 of them turned into policies. Okay, so that number should be 1,000, not 10,000.
Exactly. So I think that's my last point, that I think there should be some reflection and some realignment there with carriers on their distribution strategy.
That was our third last point of the ACA.
Yeah, right.
We keep thinking of other points.
Oh my gosh, I know. So there's things just happening. Like it's busy right now.
Yeah. The other big thing was the lawsuit with the three bigs, the e-telecoms.
There was. So that lawsuit dropped. The DOJ is suing a couple carriers in conjunction with these e-Telebrokers. And the carriers in question are Elevance, Humana, those two, correct? Was there a third? I can't remember. And then the telebrokers were eHealth, GoHealth, and SelectQuote were the three. And essentially they're asserting that there's two components to the lawsuit, which I also think makes it a little more murky. But they were saying, number one, that they violated kickback statutes, obviously some pay-to-play kickbacks, and steering these e-Telebrokers to enroll in just their plans that were suboptimal for the consumer based on those payment incentives. And then also that there was some, how should I put it?
Discrimination.
Discrimination against people who are disabled, right? And so, or people with disabilities. And so those are the two components to the lawsuit. Interesting how it'll play out. I don't think our government has a very great track record at winning lawsuits over these last couple of years. I don't know. I can't quite say that, at least in our space, it's like their record is worse than the Cleveland Browns. You know what I mean? They lose just about every lawsuit. Whether they're sued, they lose, or whether they sue somebody else, they lose. I'm not saying that's going to be the outcome here, but
well, a lot of it's like we were playing with the set of rules that you set up for us, and these are your policies, and these are, we just show me your comp plan, I'll show you the behavior. We were just operating under the confines of what you'd set up.
Correct. Well, and part of that is, also you can't change things in the future and implement like new rules. Like, for example, you can't implement like a call letter in 2023 or 2024 for new rules and regs and then say, hey, in 2016 or 2017, you weren't, abiding by that, So at the time, guidance and regulation increases and changes every single year. But I think to your point, they're saying, hey, we followed all the criteria that you gave us. We followed all the compensation. We read the law and followed things to the letter of the law, and we didn't do anything to violate. So GoHealth made a public statement asserting that, that they vehemently kind of are refuting, those charges, and that they're accepting no guilt in that, and they're gonna, sounds like, fight this to the end.
Yeah, I have a couple things that I wanted to point out there because GoHealth, eHealth, SelectQuote were the three bigs that really kind of rose to prominence in the heydays of Medicare Advantage telesales, right? And it kind of crescendoed with the Joe Namath ads that basically became the bane of everybody's existence, field agents in particular. And so I've seen there's a lot of celebration almost in the agent community of like, yeah, finally we're getting, some justice for these bad actors. And so there's just a couple things that I want to say in there because, certainly Dan and I have had our thoughts and feelings with those three in particular and our own personal interactions with all those. But one of the things that I wanted to point out was that, these entities now, they're not like small businesses, right? And a lot of the leadership that's in place now is not the same leadership even that was in place then, right? And so a lot of times it's extremely difficult where you have current leaders and leadership who are trying to do things one way that are having to atone for the sins or the actions of their predecessors. And I'm not even saying they were sins necessarily or anything. I'm just saying a lot of the brokers want to get out the pitchforks and torches and celebrate that, finally the big three telebrokers are getting their just desserts. But it's not quite so simple, and I'd caution that, right? Because as the industry has continued to evolve, I would say that most agents now and agencies have some sort of teledigital component to them anyway. So be careful what you wish for, and the practices that you think you're so justified to be against, because a lot of those have just kind of, the industry shifted, right? And it's almost like moved from that enrollment model to a slightly different version, but a lot of that is still going in place. And so I just don't think it's very good for agents to think that that's going to be a big win for them personally.
And there's that whole sentiment of the, first they came for these people.
Yeah, and you said nothing. Yeah.
And then they came for, it's kind of, and I don't want to draw the same comparisons, but I'm just simply stating that if you're out there, cheerleading and hoping for these sort of like convictions or that they go down, precedents become, set. And then there's more fuel to the fire, and it's easier for them to go down another rung and another rung and another rung. So, I at least in the industry, I don't ever cheer for or hope for the downfall of my, competitors or other people in the industry. I'm always just hope, like, how can we get better? How can I get better? How can we get more market share? How can I do a better job with our agents and our distribution? How can we do a better job for the consumer? Ultimately, that free market, that dictates that. And if we're better as an organization, we're going to keep winning and growing. But I don't want to grow based on the downfall of somebody else.
Correct. And my other point was, we know the leadership at most of those other carriers. I think they're good people by and large, and we're friendly with them. And I do think that they've tried to, current leadership is not the same as prior leadership, and they've made big adjustments to try to do things a different way, right? And
it's not quite the same. It's like going after somebody for their college days. You're going to go after somebody for what they did while they were in college 20 years ago. At least right now, 2016 seems like it was 30 years ago in this industry.
Now, the only thing I will say that as a casual observer of the industry, I do know that back in those days that are marked in the lawsuit, 2016 to 2021, I do know that there was a lot of almost pay-for-play payments going on, with, hey, give us a lot of enrollments and we'll kind of give you a blank check or something like that. But again, all those are components of the industry. I don't necessarily know that those were necessarily wrong or a violation, because, you've got to do business some way. You've got to be able to help get in front of consumers. And a lot of time, especially after COVID, that was the preferred methodology, right? Everybody was trying, including the government, was trying to drive all the business to virtual or telephonic sales.
Yep. Yeah, accurate. So we're watching that lawsuit. We're staying tuned. It'll be interesting to see what happens there. And again, I'm an observer. I don't really, have skin in this one or anything else, but I am curious to see what'll happen. We'll keep you updated as we hear things on it. And again, like I said, I'm not cheering for anybody's downfall there.
Yeah, I wanted to, it does parlay a little bit into what I wanted to talk about to wrap up with, but, especially with phone calls, the way that CMS has been so overly aggressive with every sort of aspect of marketing over the past 10 or 15 years, and the clamps have been ratcheted down in every other normal methodology for being able to get in front of consumers, so much of the business and focus and ability to reach consumers has been put on telephonic enrollments, and specifically now the consumer-generated inbound calls. As if you want to avoid all these other stupid compliance things or all these other onerous compliance methodologies and 48-hour scope and things like that, the consumer-generated inbound call has become really the only pass left, the last frontier. And so we've seen this all be funneled down to a telephonic system over the past few years, and it's really the result of the rules and regulations that have created that, right?
Yeah, and I am 100%. I'm going to get on my soapbox, and I need like a couple minutes to, how
Expound.
am I going to? Yeah, how am I really going to paint this picture accurately? Like I would tell you, I have been on, at least me personally, 3 calls with agencies over the last couple of weeks, and look, I'm not trying to offend, and if any of those people are listening, I'm not trying to really throw shade at them by saying this, but the calls to me were problematic, and the reason that they're problematic is because as I started having discussions I used to have 5 years ago with an agency was more, hey, and before anything, it's I want to understand that business, and I want to understand, okay, familiarize me with your organization. So explain to me, how do you generate interest? Where do you get your leads from? What is your business like? Are you face-to-face? Are you over the phone? Okay, great. How do you sell that business now? What are your processes? How do you train your agents? What kind of support or tools or things do you need from us to do a better job? It was, and they would explain to me all their different things, whether they go to health fairs, whether they do community meetings, whether they're buying from a vendor, I'm sending out postcards, direct mail, whatever that may be. I'm trying to get to the root of how their business runs and operates and how can I assist them. And they were constructive and good conversations. And now these days, the conversations are just entirely different because the people who are running the agencies don't have any real industry experience. They've not been in the industry for years. They just got in the industry within the last year.
They've never sat belly to belly and done an enrollment.
They've never been an insurance agent.
They don't know the downstream.
They are not really insurance agents. They just got a license. And it's because
they're marketers.
They did affiliate marketing, or they had marketing companies, and they used to generate PNC leads, or they used to generate solar leads, or they used to generate other types of leads. And now as solar's dried up because of, there's not a green initiative and some of those dollars are gone out of solar, and other things have dried up and they're not generating ERC credit leads anymore, or other things like that. They're pushing, they're getting into our industry, and you start asking about like their backgrounds and what they do. Very little time in the space, or they're kind of like a sub entity tied to a parent entity, or they're a spinoff, or they're like an arm of a larger marketing group. And so they just don't have the same fundamentals, and they don't have the same vested interest in that consumer. Like when we're talking about it, I want an insurance agent who is trying to be an insurance agent and ask those qualifying questions and do a good needs analysis, and that you want an agent who's going to give a damn post-enrollment about that person and trying to go to the doctor and actually use their insurance, fill their prescriptions and medications, and help them through the healthcare journey. These conversations that I'm having with these agencies are nothing like that. It's more about what's the dollar, what about this, what are my payment terms, when do you pay me, how quickly, what are my net terms,
can I get a heat, can I get a as earned,
it's all the money,
what's the highest override.
Yeah, and it's like how much can we quickly, and it's all, even like the phrases when you're talking to people, and it's just like, like my people got to eat, and stuff like, and you're like, hold on. I don't like doing business with somebody where they're going like, my people got to eat and we got rents of this and we got to pay our overhead. It's like, whoa, slow down.
How many apps do I need for a Rolex?
100%. It's more like, can you just slow the hell down and talk about, here's why we're good. Here's what we do to help the consumers. Here's how, we're better and separate ourselves from the others. And they're not. And they all want, again, a big element to the problem in the industry right now, too, is they all want heaped advanced commissions, all of them. They want, and again, one of the things that we talk about, and it's a pain point in the industry, going as earned or getting paid a little bit of money and then continuing to get paid on, incentivizes the broker, the agent, the entity, the FMO, whomever, to continue to provide ongoing services and support for that life or for that member. If you completely take away that incentive and you're paying just a one-time transaction fee, then that investment into the consumer and the policy completely goes away. All they want to do is throw that business against the wall. And as long as it stays active long enough for them to get their payment term,
to not get a chargeback. Yep.
I even know agencies who even know almost like they're selling Medicare or health products now, almost like a life or an annuity with like the surrender period where they know exactly at what year there's no more surrender charges, and they're immediately calling the client to sell them a different annuity. Or same thing, they know exactly at what date they're not going to get charged back on that heap commission, and they're immediately following to call that person and flip them onto something else. And so it's so bad. And again, the agents don't care. The people running it don't understand the industry. They're doing high volume because these people are also, through a different tax ID, the ones generating the inbound phone calls and everything else. And so they're taking up a much larger and larger portion within the industry. It's driving a lot of issues with compliance and quality. And ultimately, and the only reason that I'm, bitching and complaining about it is because then, we have to suffer some of the ramifications of more regulations, more rigorous screenings for marketing pieces, more, scrutiny over every single thing to do with the calls and the quality with the consumers. It's hard right now.
Well, and I wanted to illustrate the point of that's why I don't think we should celebrate the lawsuit against the call centers too much, because it's almost fractured, and a lot of what I would consider not great practices have just been kind of fractured and spread out amongst different entities through the industry instead of three major ones. And there are carriers who have downlines that are participating in this, and it's not exactly the best, most healthiest long-term thing for the industry. But again, like I say, how do you do high volume enrollments? How do you connect with the consumers these days if it's not through some sort of consumer generated inbound call? If you go to the average field agent or sub agency and you say, hey, go out and do things the old fashioned way, so to say, they have so many rules and regulations, and it's so cost prohibitive that it's almost impossible for them to go do it this good preferred way, because we blew that up, right? And so it's all funneling through these ways that the industry is going, well, that's not the way it should be. It should be, this old fashioned way, right?
Right. And that's, again, going back to we talked about it a few weeks ago. It's, what would you do to change marketing rules? It's almost like get rid of all of them and go back to the drawing board, and let's think this through again as to what should be compliant and what shouldn't be. And it's so bad right now, it almost needs to be completely blown up and going back to scratch. Because again, if things don't change the way that it is, we're going to continue to see more of this evolution where, as far as the total volumes of enrollments done, you're going to see less and less and less done from field like legacy brokers, and you're going to see more and more done by these entities. And I don't think that that's actually a positive thing for the industry or for the consumer or for anybody. And again, look, I think that still the field agent who in a local community that you're meeting at a local health fair or, local gym because they're posting up because there's a Silver Sneakers event or whatever else, I still think that that's a quality enrollment and has more longevity and LTV and more service on average than a phone enrollment.
But
right?
It is. But everything is so damn hard and so complicated and so overly regulated. Let's say you wanted to just set up a table and be like, I'm a helpful insurance agent. Well, you better go scrap for a Walmart because you got to file that, and you got to go make sure that you can scrounge for that and knife fight it out for who gets those Walmarts.
And remember, don't catcall anybody. And God forbid you cross this threshold of the table right there, because if you stick your foot out beyond the threshold of the table, violation.
And make sure you only put a dum-dum sucker out that's 5 cents value, that you don't put out a muffin, because if they took a drink of water and ate a muffin at the same time, then it's a meal. And you're bundling, it's so damn ridiculous. So you have.
So I guess what Mike and I we're venting about is all these rules that are there to protect the seniors and help them. I get the concept of doing that. No, I don't want seniors to go be taken advantage of, for anything, whether it's healthcare or whether it's a life insurance policy or whether it's even signing up for a cell phone plan and they don't understand they're getting into a 3-year contract. I don't want seniors to be taken advantage of in any sort of an interaction. But what I am saying is the rules have gotten so long and ridiculous and onerous that by now having the only means and way of doing it is by these consumer-generated inbound phone calls, is you've allowed the business to be controlled.
That aren't actually necessarily all consumer-generated, right?
Correct, yeah. But you've allowed the industry at large to be controlled by companies that are offshoring a lot, that aren't following the rules, or people that really could actually end up being some of the worst people to really have their grip around the industry. So.
Yeah, and the other, I guess, swirling component there that Dan mentioned in talking to all of these different agencies is that most of them were large producers in the ACA space over the past 3 or 4 years, right?
Yep.
And we've seen the ACA grew from 2021 of 12 million lives, 12 million heads covered, to by the end of last year, it was 24.3 million. So you had the industry, somebody wrote 12.5 million lives, doubled the ACA head over 4 years. And a lot of that was done with these call centers and the inbound calls and a lot of these practices that we've been talking about. And so now you have a lot of horsepower of entities, sales engines, call centers, small agencies, anywhere from these big box legitimate agencies to these smaller cottage agencies that were doing it the right way that have somehow produced 12.5 million enrollments over the past 4 years, that now they're seeing the writing on the wall in the ACA space, and they can't make a buck right now. So what are they all doing? They're all land rushing back again into Medicare. And and Dan and I keep joking. We say they changed their jersey, right? They're like, oh, we were an ACA shop. Now we're a Medicare shop. And over there on the ACA, it was the wild, wild west where I could do anything, say anything, try to make a 3-minute AOR enrollment, cover nothing, don't give a damn about what happens to that end consumer. And now they're in Medicare, or trying to get into Medicare, where there's much more regulation, many more rules, much more oversight, and they're finding it a very difficult way, a hard time to get in the industry. And the frustration of what we're both having, I'm not exaggerating when I say almost every day we're having a high level agency conversation, and we tell people, go something like this: nope, that's not the way you should do it. You should do it this way. Trust me. If you do it this way, you'll be better off long-term and you'll have a valuable business. Mm-hmm. I like that. I hear what you're saying. That makes a lot of sense. I'm not going to do that. I'm going to go with this other group that just, said that I can grind and
yep. And I'm telling people
we can eat.
If you go Heaped and you take all that cash up front, there's going to be a couple things that happen. You model this out, right? And these people, they all are of the mindset that they're finance gurus, right? And I'm not claiming to be the best, highest acumen, CEO, right? But I will say, every one of these little agencies I talk to, they act like they have a finance degree from Yale or Harvard or some Ivy League school, like they're just the smartest damn person ever. And they talk about Heap, and I'm just saying you're not going to have the effectuation rates that you want. And then also there is that period for your chargebacks you're going to get. And what happens to all of them by the time they sit there and pencil out their comp plans to their people, their CPAs, their CPS, all that kind of stuff, and then they get into it 3, 6, 9, 12 months, they're not making the money that they thought they were going to be making, or they're losing money, and it's not sustainable because of their crap quality business. And they've already paid the reps the commissions and X and Y and Z, and so many of these shops end up in a bad spot financially. So some of this is working its way out of the system, but it's not because the carriers are intervening or CMS is intervening. It's because just market economics are there, and they're screwing it up themselves and working their way out of the systems, but not until after they've really screwed the pooch and kind of wreak some havoc in the marketplace for anywhere from a few months to a year, right? And so that's the other frustrating thing, going back to what Mike was saying, is I feel like I'm a father with kids being like, trust me, I have some life experience. Don't be stupid. Do it this way. Thanks, but no thanks.
Thanks, Dad. You don't know anything.
Yeah, exactly.
So what we've already seen is we're only in May, and we've already seen entities who moved out of the ACA space and went and got a Heap contract through one of a handful of organizations that are known for that, right? And already what we've seen the heaping agencies do is they've already made adjustments, because it's not penciling for them either, right? They're going, okay, well, we can only give you X amount of percentage up front, and then we'll pay you a majority on the back end once it goes live, because they're getting in arrears already. And so what Dan was saying about all these would-be finance majors are doing their napkin math, where they go, here's my Heaped dollar amount, here's my acquisition cost plus what I pay my rep in commissions. They do their napkin math, and they're like, that sounds like a recipe to print money. Boom, let's go. Buy the leads, get the calls, pay the CPA, the acquisition cost, pay the commission. And then on the back end, they go, wait a minute, this is not matching up. I have operational costs. My accretion was worse than I thought. These other guys that are doing the same thing as me just went and sold my consumer, or Mima called her agent, and her agent told her to not switch, which, probably advisedly so. And they're not running a profitable business. So now, they're all coming to us and going,
well, hey, can you give me better margins and more than I was making? Because now the solution is for me to just get more money from an entity, and that'll fix it. And it's not about getting more money It's about they don't have like a very sound operating and business plan.
You got to build the foundation brick by brick.
Yeah. So it's just a thing. It's a challenge. It's we see it more and more and more right now. That is probably the biggest underlying thing within the industry right now that I don't think many people really know exists. I mean, we experience it. We have these conversations. We're really apprised all these conversations that are happening. And again, I wish that those people, if they can't go look in the mirror every day and say, like, I want to be an insurance agent that helps people with their insurance. I want to help them with their health and wealth. I want to, I like doing this. It's noble work. It's good. If that's what they want to do, if they're just like, hey, I'm trying to make a bunch of money so I can go get my Lambo and my Rolex, dude, get the hell out. Go sell something else, man. Go to some other industry. Go peddle other things. We don't want you. Get out of the business.
Go do it for a long time. Do a good job. Build a business on sound principles, and then go get you a Lambo and Rolex.
And for the record, I like when these agencies, I'm not your Huckleberry, right? Like when we're talking to these people and it's more about like, I'm asking, we want partners, right? So if you're listening to this, don't hit up Agent Boost if all you're going to say is, hey man, here's all my spreadsheet of all my levels. Which of these matrix can you beat? Yeah, can you beat this commission matrix? Or by the way, I don't want to partner with you. I just want like a la carte buffet, one contract that you'll beat on. But then, train me, help me, educate me, teach me the business, do all these things. I'll give you one. I'm not your guy. We want, stable partnerships with people where we can actually help them understand, learn the industry, grow, and have it be something sustainable with longevity. Those are the kind of partners and agencies that we're looking for. So
when, Dr. Oz famously said in his confirmation hearing that he thought there was too many agents and brokers in the industry, I think there is. There definitely is. As the ACA grew this massive distribution model over the past few years, and same thing with Medicare, there are too many people trying to get an shrinking part of the pie. And what I'm very excited about is it is going to boil down and keep the best agents, the most sophisticated agents in, the most savvy, the most well-intentioned agents are going to stay in. And the kind of, agents that are just in it for the quick money, they're not going to survive because they are not going to have a seat at the table as all these changes start to materialize and consolidate.
Yep. So, paint ahead. So I guess what I would remind agents of when you're listening and like, man, things are like really bad. Aetna's pulling out and subsidies aren't getting renewed and this is all happening and it sucks right now. Yeah, it kind of does. Like it's hit this like critical, like this inflection point where now we're just going through a lot of these corrections as an industry because things just weren't sustainable with that trajectory of just year over year over year. So again, we're at that correction point. We're in a swing of trying to get back to, even from the carriers, from a finance side and being reasonable with their bids and their spends and their products, to sales volume on the ACA side, to Medicare. Everything's trying to course correct. And I think that if you can just get through and hang with it for, and I talk to agents and some of these agents that are good agents that have been around for a long time, dude, they're struggling, kind of being, man, I've been in the industry for 15 years and these last 2 years are brutal, and I agree. I would stay just, hang tight, dude. Hang with us. The industry needs good agents.
The night is darkest just before the dawn.
Yeah, so hang with us. Don't go anywhere. It's going to get better. We just need to work through this correction for this next kind of year and a half. And then I think we do have like a really good, trajectory right after that.
Yeah, so I think, there's going to be opportunity even immediately. And maybe next episode we focus on, what should you be doing right now as an agent to be successful, to get dollars in the door? Because we definitely have a game plan for that. And we definitely have agents that are not just surviving, but thriving. And so, if you are not one of those agents, definitely reach out to us. We would love to kind of give you a step-by-step instruction on what we think you could or should be doing.
Yes. And just, I guess to end, I would say when things start to get, scary, uncertain, you don't know, the worst thing that you can do is just hunker down and stick your head in the sand, so to speak, because, we have a lot of people that's how they respond to it. That's not the winning strategy. So, with all these things happening, like Mike said, we do have a plan. We work with our agents. We tell them like, hey, Here's the things you need to be doing right now. It's time, like more than ever, to go put your foot on the gas, go grow your business. And if you don't, you're just going to die on the vine.
Yeah, and if you ever are out there thinking, oh, man, it seems like these guys maybe you think we're stupid, that's okay. But if you ever think, hey, these guys seem to have a pretty good pulse on the industry, where things are going, where things are at, that means we also have a plan, right, for our business. And we also have strategies to help us continue to be successful, continue to not just survive, but thrive. And we'd love to help you do that as agents as well.
Alrighty, y'all. Excited for next week already.
There we go.
Till then.